Hello everybody and welcome to OAG's latest webinar. Now for those of you who were listening live last week to the first version of this webinar, you'll know that we had some technical problems and lost connectivity with one of our speakers. So we've done you all a big favour and we're in the process of re-recording now. And so if you're listening back to this, welcome back, and we're keeping everything crossed for no technical disturbances. Hopefully I haven't jinxed the recording by saying that. In this webinar, we want to dive a little bit into Africa and look at really what's happening across the continent in three main perspectives: connectivity, capital, and capacity. To do that, we're going to look at fleet and aircraft availability across some of the parts of the continent. We're going to look at how route development's happening at the minute and how tourism growth may be aligned with that. And then hopefully we'll be talking a bit about how policy is helping to unlock growth. With all of that in mind, there are some interesting topics to explore there. I'm delighted to be joined by Sean Mendis. He is director at seanmendis.com and well experienced and well-known commentator on African aviation, and has held a number of senior management roles. Sean, welcome to OAG's webinar. We're very much looking forward to hearing your thoughts and views this morning.
Thanks for having me, and hopefully my IT will survive today's baptism by fire.
Oh, fingers crossed. For those of you who don't know me, I'm Deirdre Fulton, partner at Midas Aviation. I've been a long-time host of these webinars for OAG. And we're also joined, last but not least, by John Grant, OAG's Chief Analyst. John, welcome back.
Hi, good morning. Last is operative, Deirdre. I was the last man standing last week. I think I lost both you to your microphone and Sean to some IT issues. But yeah, let's repeat. It's a bit like the BBC in the summer, isn't it? Everything's a repeat.
Yeah, we'll be on a loop somewhere ad infinitum. Yeah, I had technical issues last week as well. So again, I'm hoping those gremlins are all now out of the building, and we'll have a trouble-free webinar. Okay. Those of you who join us regularly will know that we like to start high level on these webinars, and we like to take a look at the global capacity position. So what we're showing here is global capacity by month, and we've got a baseline here of 2024. Was that the last normal year? 2025 probably was fairly normal too. That's the lighter grey line. And then you can see when the summer season, which is April through to October, was filed in March. This is what things were looking like, fairly optimistic, a little bit of growth on the previous year, although the peak was, fairly flat. What actually happened because of the outbreak of war in the Middle East is that we saw capacity globally fall as carriers took capacity out of the region. And we're still seeing, interestingly, this is the first month where we're seeing capacity spike back up above last year. I think there's still a bit of optimism, isn't there, John, in the schedule for the rest of the summer? But actually, things are looking better than they were a few months back.
I think it depends who you talk to, and obviously in the Middle East, there's between 15 and 20% more capacity that could be added back, although allowing for, just reloading those schedules, priming the market, getting forward bookings. I don't see that happening before October at the earliest. And I think even there, we probably need to see a period of peace for at least 2 months before airlines will be really confident about anything. But in Europe, it's fortunate that we're doing this again, because IAG on Friday announced that they expect their yearly production to be flat. So they've cut back on any capacity growth they may have had in the pipeline. Lufthansa and the Lufthansa Group similarly have made an announcement this week. So European carriers, I think, are much more cautious about their plans for future growth, and the US majors similarly. The US majors, it must be really frustrating because some of them have capacity, and because of an archaic FAA control system, they are unable to fully operate in places like Chicago and Newark and the major hubs. So they're being artificially constrained by the regulator at the moment. The good news for the airlines is when you see artificial constraints, they tend to get higher airfares.
Pushes up yield, doesn't it? So it's not
has done in the past.
There's always a silver lining, isn't there, or something?
There is, and they're saving on fuel costs at the moment. And as the US airlines historically do not hedge and never seem to learn their lesson, that's going to help them a bit as well.
Yeah. Maybe that's the focus of our next webinar in September. But let's see. Who knows what will have happened by then. Okay, let's turn to Africa then. So, and actually what we've done here is just go the layer below the global capacity figure into looking at firstly domestic capacity by region. So what we're showing here, and you can see that clearly domestically Africa is bucking the global trend. So global capacity is fairly static at that top level, and you can see that some of the bigger markets, very large domestic market in China, growth of just 1.9%, North America. As you said, John, those constraints really hampering the ability of airlines to grow. But Africa is going gangbusters in terms of almost double-digit year-on-year growth. And there's a number of things driving that. So if we look at some of the domestic markets in Africa that have got most growth this summer, South Africa is obviously the biggest market. It's pretty mature, but there's still some growth happening. Nigeria, and there's a story there that I'm sure Sean is gonna tell us about, but more than a third up year on year. I sort of feel on this one, we probably should have shown you a bit of a longer time series, and we would see that this is a market where there has been turbulence, I think is fair to say,
boom and bust,
of expansion and contraction. But Sean, what's the story in Nigeria? Because on the face of it, goodness me, 36% year-on-year growth. What's actually happening?
And it's not just 36% year-on-year growth, it's 36% year-on-year growth from a fairly high base. So, I mean, relative to, I think it is the second largest domestic market in the continent behind South Africa. And I think, if you look at the larger macro situation in Nigeria over the last decade or so, you'll see that Nigeria in the late 2010s in particular, early 2020s, was stuck with having significant problems with foreign exchange. And the economy in general was struggling as a result of that. That has largely changed with the current administration in power. And in addition to that, the administration has gone ahead and ratified the Cape Town Convention. So where in the past, Nigerian carriers were often stuck with the ability to do their maintenance, their ability to acquire aircraft because they simply couldn't get hard currency to do it, they were forced into relying a lot on winter ACMIs, northern winter ACMIs, where obviously the market rates in Europe are a lot lower. And consequently, they were bringing in surge capacity in the winter season and effectively having scarce capacity in the summer. With the ratification of the Cape Town Convention in particular, what you've now seen is lessors are more and more willing to put their airframes into the Nigerian market because they're more confident in the regulatory environment to get them out if things go sour. And you've seen, I think the big one over there was AerCap. AerCap has put in an aircraft with their piece. And I think more and more people are taking the mindset that, you know what, if AerCap is doing it, this is probably a market that we can rely on. And we're seeing more, and I mean, literally every week you're seeing a Nigerian carrier has taken delivery or signed an MOU or done something with the new lessor, and that new capacity is coming in. And certainly there's growth in regional, there's growth with Air Peace and long haul as well. But a bulk of those new aircraft coming into the Nigerian market are being deployed on domestic routes, and that's why you're seeing the 36% capacity.
Yes.
And this is sustainable capacity because it's not just like these seasonal ACMIs which come for 3 months and then disappear again. This is actually dry leases which are coming in onto your AOC, and I think that is something that it's a very positive trend for Nigerian domestic aviation, and I think that will be sustainable for the next few years.
It'll be interesting. I was going to say, I think it's interesting. In the last week, good old Norse are once again looking for somewhere to place 5 787s that are on their way back from India earlier than anticipated. Is there a role for wide-body ACMI type work in Africa?
There's definitely a role for it. In fact, I think that wide-body ACMI is probably where the real opportunity is in Africa, because there's so many of these small African carriers which may have isolated, former British colonies have markets to London, former French colonies have markets to Paris, trader economies have markets to Dubai, but none of that really justifies the cost and the investment of going in and acquiring a wide body and adding it to your AOC and training crew and having a specialized thing for one route. So the reality is where Africa can really benefit from ACMI is less in terms of this seasonal narrow body stuff, but rather in terms of strategic use of wide bodies in partnership. However, I don't think Norse is going to be the answer, because while we're talking about Norse having availability for winter, the key question on everybody's lips is Norse still going to be around in winter? And, I had someone ask me this just on Monday, should we talk to Norse? We're looking for this. And I'm like, guys, don't assume that if you do sign with Norse, that they will actually be around in November to make that first flight for you. And I think anybody who's looking at Norse right now, I mean, their own guidance, if you read their own guidance notes to investors, is, I don't know what's happening. Our fingers are very crossed. And if you've got ideas, let us know.
Yeah, well, they're looking for new strategic opportunities. And I think they're probably at the bottom of a jam jar by now.
I think the new strategic opportunity is in bankruptcy court.
Oh, well.
Yeah.
Okay.
Back to Nigeria for a moment.
Just going back to these numbers. I found it interesting that we look at 8% domestic growth in Africa, which is a large percentage year-on-year growth, and 36% in Nigeria. And yet, in the overall scale of the aviation industry on a global perspective, it's still a relatively small market, isn't it? There is lots of opportunity, you would think, for further growth.
Absolutely. But you know what? When people say that it is small, we look at it in small in terms of population. Africa has 17% approximately of the world's population, about 2 to 3% of the air traffic. But if you look at it in terms of GDP share, Africa is about 2 to 3% of global GDP share, and is 2 to 3% in terms of air traffic. So when you look at it from that perspective, Africa is lagging behind. And I mean, there's no secret to the world that, Africa is economically handicapped relative to the more developed world, obviously. But it's not as though Africa is not doing it. Where Africa's problem is that a lot of African issues, which is stifling this growth, are self-inflicted. I mean, we have high taxes, we have a lot of bureaucratic red tape, we have 50-something different jurisdictions for customs and so forth. So if you are moving something, an aircraft part between Nigeria and Ghana, I mean, we're talking a 40-minute flight, but that 40-minute flight, if you send it by road, crosses 4 different jurisdictions: Nigeria, Benin, Togo, Ghana. And, that just doesn't make it practical. Your cost goes through the roof. Your ability to, you're stuck with having to maintain higher stocks and things. It just makes it's a 30% premium effectively in operating costs by running an airline in Africa relative to say, Europe or North America. And, that is the reality in terms of why costs are higher and why demand is consequently stifled.
I think you've also got to kind of come back to the population and GDP perspective. You've also got the reality that for many, many countries, they're still classed as emerging markets. And some of that's partly because of the complexity that you described, Sean, around legislation and bureaucracy and policies that actually work against free movement of goods and free movement of people. And I think there's a sense, certainly from the outside looking in, that for a very long time, Africa or parts of Africa are on the cusp of unlocking growth. I guess the reality is how do those things coalesce together to have the kind of ideal market conditions. I mean, if we look at just on this slide, we were just showing really for the purposes of trying to illustrate the challenge that you've got really aviation growth lagging population growth. So you've got a significant, so the grey bars on this chart are population, Nigeria, by far the largest population in the continent, but relative to that, air capacity in the country. And you can sort of see that in more, and some of this is geography, obviously Egypt, Morocco, benefit from their proximity to Europe and the Middle East, and also have significant tourism flows because of that proximity. South Africa, again, has a large, well-developed tourism market. So you can sort of see that there are markets which are perhaps bucking the trend, but there are reasons for that. And then the other part of the equation, I guess, or one of the other parts of the equation, is GDP per capita. Now, we know, most of us people in the industry, that typically, until you get above $2,000 per capita at GDP, air travel doesn't really become accessible to a population. Now, the African average is creeping up. It's up at nearly $3,000. But actually, if you look at many of these countries, they're still under that threshold. And so you wouldn't necessarily expect them to have a fast growing, large and well-developed aviation market unless there was some other sort of factor that was driving growth in the country. What we do know, Sean, is that once that threshold is reached, then the relationship between GDP growth and air travel growth is really strong. Typically, air travel will grow at 2 times GDP, although in some emerging markets it goes faster. So that sense of potential and potential growth, the optimist in me feels like maybe of the 20 plus years that I've been in the industry, we've been waiting for Africa's potential to be unlocked. It feels to me like we are getting closer, but is that just my natural optimism? I'm not sure.
Well, you know what? I've built my career in Africa, and if I wasn't optimistic about it, I would have quit on this continent a very long time ago. So definitively, I am the optimist on this. And as you said, when these countries are entering this lower middle income range, there is a spurt. But in Africa, it's not just that. That growth which gets unlocked at that point, when capacity is added, there is a lot of suppressed demand. There is demand that is pre-existing in the market, but is not being served because nobody is flying. And so in addition to that growth, you get the organic growth you get at double GDP rate, which is just the growth that is generated because the economy is growing, because of additional economic activity, because of entrepreneurship, urbanization, and all the other trends you see as you enter into that lower middle income. You also see that simply by putting one flight a day on it, because unfortunately or fortunately, when airlines do something, they have to do it in units of 50 or units of 100 or whatever the capacity of the aircraft is. So if your demand may have been 10 passengers a day, it didn't make sense. But now your demand is at 30, it could make sense to fly. And that gets you from 0 to 30, not 10 to 30, even though on paper that demand of 10 was already existing, but it wasn't served. So I think that's where you see initially this huge surge when these African economies begin to get into it, or any developing economy gets into it. It is because there's a combination of organic demand, suppressed demand, and finally stimulated demand. All three of them come together, and that's a perfect storm. And this is not unique to Africa. We've seen it in Southeast Asia, we've seen in India, we've seen in Latin America, Eastern Europe. All of these economies, when they enter this lower middle income range, it's the glory period. And Africa, as you pointed out over there, is poised. There's 40-something of the 50-something African economies which are in that 1,000 to 2,000 range. They're literally on the doorstep of it. And as they happen, it'll happen. And, it's fascinating to see, because the domestic traffic tends to be where this first is seen. You're not going to see people, flying off to the UK or flying off to Dubai or whatever initially. You're going to see them traveling within their own country. And I think that trend of that 8.7% growth, which is leading the rest of the world, is indicative of, it's the shoreline being pushed out with the tsunami about to come in. And I think that is something that anybody who's, who follows African aviation should take a lot of heart from that, because it is indicative that things are heading in the right direction. And certainly there are external shocks, whether it's Ebola or, fuel prices or whatever else that may cause turbulence. But the general trend is in the right direction, and I'm particularly optimistic about that.
And Sean, does that mean that because we're going to see this period of boom, we will inevitably, like we've seen in other markets, see some airlines collapse and fail? Because it's part of that rapid growth trajectory, isn't it? Where you see some carriers come in, they're not well funded, they can't survive, they disappear. The underlying growth continues, and it's survival of the fittest, etc. But would you expect some of those carriers not to be around or consolidated with others in the next 5 years, or even
I don't
5
think
weeks?
I don't think consolidation in an African context happens in the same way that it happens elsewhere. Again, across multiple jurisdictions, and because so many airlines in Africa are reliant on state financial backing, and that is just the reality. Access to capital in Africa is very difficult. If you're looking for capital in the levels you need to start an airline, you are pretty much tied into pursuing a state-backed funding in some way, pursuing funding from high net worth individuals, which comes with its own set of baggage, or pursuing funding from conglomerates where obviously your interests are subsidiary to the interests of the larger group. So all of these are suboptimal situations, and in fact that is a big reason why African airlines tend to do poorly, because they have poor decision making driven by poor priority setting at the strategic level.
There's not a sort of a playbook that's being followed that is aligned with it. Here's the step-by-step guide to how to set up an airline, make it sustainable, make it profitable. You've got all of those different levers pulling in different directions, and Africa's not alone in that. There are other parts of the world where the same thing happens, but it's a complicating factor for sure, isn't it? I just wanted to quickly go back to the deck and illustrate that point we were making about emerging economy growth before we move on to the next one. You can see right now that fast-paced growth, and I was looking at international capacity now. The one thing actually I wanted to add was in that domestic environment and internationally to some extent, what you start to see in emerging economies, and we touched on this last week briefly, is the value of time. People start to value their time much more when there are increasingly competitive on price alternatives to how they utilize that time. So rather than taking a bus for 4 hours, if there's a quicker option that's affordable, then we see people switching to air travel. There's also the aspirational element of travel, so of air travel in particular. It's still, although the reality is often not, but it's still perceived as, to some extent, a mark of someone's status and their ability to afford to travel in a particular way, and their ability to demonstrate that they're.
We've seen this all around the world, haven't we? I mean, it used to be a standing joke that if you were, and in different ways, it used to be a standing joke if you were flying from London to Nice with any airline, you arrived in business class, so everyone saw you getting off the aircraft steps first, and you could go sulk back in economy class. We see this in markets like Poland and Eastern Europe through EU accession, when the 24-hour coach service got replaced by the 1.5-hour flight from Warsaw to London, or from Bydgoszcz to Edinburgh. I mean, whoever thought there'd be a market from Bydgoszcz to Edinburgh? So we see this everywhere. We've seen it in Peru. We've seen it in Mexico, where Cancun, suddenly all the chickens on the bus were suddenly replaced by passengers and hold baggage.
But you know what? I think in Africa, though, the potential is even higher, because the ground infrastructure in Africa is significantly poorer than it was in many of these other regions. A lot of these other regions had existing railway lines, had existing highway networks, and so forth. While in Africa, the reality is sometimes to just get 100 miles. That could be an entire day's journey, while in a more developed infrastructure environment, that is something which could be like 3 to 4 hours of driving, depending how fast you drive. And I think that's a big point. I mean, I'll give an example. In Ghana, between Accra and Tamale is a 40-something minute flight. However, it is literally a 14 to 16-hour bus ride. And back in 2010, when Africa World Airlines was doing our business plan, we looked at it and we said, right, this is a market where there is potential, and maybe we could do 1 or 2 flights a day. Within a decade, that was going, between the various operators there were 9 to 10 flights a day flying on it, because once you unlocked that ability of saying, I do not have to spend 2 entire days to get to the capital city to do this, investors began saying, you know what, I can go there in the morning and come back in the evening, so why don't I just build a factory there? Workers are willing to relocate over there because they know they can get back home to families and things and such. And, you really cannot underestimate the value that good air connection links bring towards boosting an economy in general. And I think that as the numbers are showing, it shows up first on the domestic capacity, and then begins to see on the regional capacity, and then subsequently on intercontinental capacity. And, Africa's got the groundwork done for all of this. Africa's got the single African air transport market in concept on paper. They've got the African Continental Free Trade Agreement, which makes, again, on paper, drops barriers in terms of cross-border trade and things like that. So everything is in place for Africa to do it, but like everything, an opportunity can be presented. You've got to seize it and run with it. And that's where, African Airlines have both the opportunity and the challenge of doing that.
And I think from work I was doing in West Africa a few years back, I think one of the real growth opportunities is the student market for low-cost airlines. There are, and you know better than anyone, Sean, there are capital cities that have got very large academic establishments that pull in students from around the rest of Africa. And by the virtue of the low-cost airlines, they're able to fly more frequently. They're going back and forth more regularly. And the momentum just continues to build and build.
No, absolutely. And you know what? The growth in Africa is going to come from the bottom end of the market, because, as you say, there's students, and it's not even just students, it is the younger generation which are more globalized. Their pop culture, their concept of e-commerce, their willingness to do things in self-service and so forth makes them ideal customers for a low-cost carrier. And anyone who's able to actually crack the secret of offering safe, reliable, and affordable air transport to that market segment is going to make a killing on it. And remember, the consumers who are the students today and the entry-level consumers today are tomorrow's middle class. So once those spending habits are established and people are used to taking city breaks and are used to using their discretionary income on air travel, that is just going to be a steady path of growth upwards. So I think, again, I think the message is consistent in every one of these sectors that we're discussing, is that the potential for Africa is there and it is inevitably going to be unlocked. The only question is when and by whom.
Yeah.
I think we can't ignore, and this kind of illustrates, I guess, what we know in terms of population growth and where it is and where it's coming from. You've got some really, really significant concentrations of population right across the continent, and actually, of a megacity currently is a population of 10 million or over. You've got a number of additional African cities where they're going to join the megacity club by 2030, and then even more by 2050. So if you think about it from the perspective of, we know that what makes air travel work is, growing economic wealth, fast growing populations, desire to travel, a whole raft of other things that underpin that. The challenge, though, is we have yet to see, and you can correct me if you think I'm wrong, Sean, but we have really yet to see low-cost carriers. I was going to use the word explode there, but that's probably not the best context, not the best term to use in the context of aviation, but really expand dramatically. We've seen significant LCC penetration in other emerging markets. Southeast Asia is the poster book, if you like, where now I think 65 or 67% of capacity in the region is operated by LCCs. We're seeing the Middle East, for example, LCC capacity there has gone from 10% to 25% in just 10 years. So all of the things on paper are there. This is a market where low-cost carriers should theoretically be able to come in and really, really deliver. But we know that there are things holding that back, don't we? And it's about the financing of it, isn't it? On all sides.
Sean,
I think there's three. Yeah, go on, John.
I was going to say, I mean, the taxation issue, the aviation
Absolutely.
issue is crucial in Africa, isn't it?
Absolutely. And, as I was saying, there are three main reasons why we're seeing the lack of low-cost carriers, or at least the scarcity of low-cost carriers over there. Number one of those is high taxation, especially on cross-border transport. And, last week I was pricing out a round-trip itinerary between Accra and Freetown. And the taxes alone, just the taxes, forget before the first dollar even goes to an airline, the round-trip 2-hour round-trip flight, the taxes alone were over $450. It used to be $500 plus, and then Sierra Leone has scrapped a $50 security fee, so it's down to $453. And when you say taxes are down to $453, that just tells you how ridiculous things have got. And this is a 2-hour flight on a regional jet or 767 or something like that. In Europe, in North America, in Southeast Asia, that kind of flight, the all-in cost would be half or a quarter of that, if you got a good deal. And yet this is just taxation before all the other costs start coming in. I think the taxation is something that is definitely stifling cross-border numbers. Domestic taxes tend to be a lot lower. So example, like the same Ghana example, domestic taxes until a few months ago, until February in Ghana, were 5 Ghana cedis per passenger, which at the equivalent was approximately 40 US cents, while international taxes were in the $150 to $300 rate. And, there was definitely a cross subsidy coming in there, for better or for worse. That has changed. The numbers are getting a bit more sane on the domestic side to be able to cost recover. But anyway, separate story there. So that is point one, cross-border. Point two is infrastructure constraints. You cannot run an aircraft to the same level of utility that low-cost carriers in other parts of the world can. And that is partly due to the fact that, so many, other than the major international airports in big cities, so many other airports in Africa just don't have runway lighting, don't operate 24 hours. You're constrained effectively to a 6 a.m. to 6 p.m. window in 80% of the airports you fly to, and maybe until 9 p.m. in the others. Because even in the big cities, with very few exceptions, you do not want to be landing at 2 and 3 in the morning and then having to find ground transportation at home. The security situation, the infrastructure situation, there's no public transport, street lights aren't always reliable, so there's more chance of accidents just driving to your hotel and whatever else. So people just don't have the preference of doing that. Consequently, aircraft can only be utilized maybe 9 hours a day versus 12, 13 hours, which you need to be able to utilize these aircraft as a low-cost carrier to just keep your ownership costs down. And finally, we go back to that old bugbear, which is access to capital. If you are paying interest rates of 15, 20%, and that's not unusual in Africa. I mean, 20% plus interest rates for US dollar lending is the norm in most African countries right now. So if you do not have access from global markets and you're stuck to local market lending or local market financing of your assets, you're going to be stuck with an asset that quite simply cannot be sweated at LCC level utility, and consequently cannot generate LCC level or even any sort of unit revenues needed. So you've got to go for unit revenues that are higher simply to recover your costs, and consequently you cannot offer low fares. You have to be able, it's a lot easier to throw in a meal and baggage and whatever else and charge a higher fare than to rely on ancillaries. Because remember, Africa does not quite have an ancillary culture yet. Even when you look at the low-cost carriers that do exist in pockets like Kenya and South Africa, mainly on domestic routes, ancillaries are still a experimental market. And I've had a lot of conversations with Fly Sapphire. I've actually had this discussion with Airlink just last week, because they're beginning to trial selling exit rows in some of their domestic flights from June. And one of the comments that they made was that this is actually, they're seeing better than expected take-up on that. So there is potentially a market, but it's not being tapped yet. And I think that entire culture of
not
traveler
mainstream yet, is it?
Exactly. African travelers expect to get a meal, expect to have everything, and to be treated like kings when they get on the plane. It's what John said earlier about this whole aspirational thing. If I'm flying, I must be a king. And I love telling passengers
I think we do too, Sean, but the market's moved on.
Yeah, but if you go to Starbucks and order a coffee, you don't expect to be taken to Paris by the time you finish it. So if you get on a plane and sit down and buy a ticket, why do you expect to get a free coffee?
Yeah.
I'm still in there. I like a free cup of tea or coffee.
And often the Starbucks coffee costs more than your ticket did.
Yeah, but isn't that actually the opportunity? Because, if you look at how ancillary revenues have grown in those mature markets of Europe and are now growing in North America, you have to think that is potentially a huge aspect of profit margin for these airlines in the coming years. But you've got to, and it's exactly the same in India. I mean, Deirdre and I flew with Indigo, and they may be a low-cost airline, but their service level is still quite high for a low-cost
absolutely.
airline.
Yeah,
absolutely. I mean,
unfortunately, they've now got Slasher Walsh in there, and everything that was free will now come with a price tag.
Oh, he's trying
What was
hard
free?
to
What
cast
was
off that
free?
title.
What was ever free on Indigo to begin with? I mean, seriously.
I know. I mean, I think
the only good
just
thing about an Indigo service on board is the chicken jungly sandwich. You've ever had that? I'm craving. I am craving one right now. You got me thinking. I'm really craving one.
It was all right. It wasn't bad at all.
Okay. Again, we've hinted. Well, we've more than hinted at this. Access to finance and the ability then of African carriers to renew their fleet, to expand, is hampered, isn't it? Significantly. We've got this is average fleet age across the different regions. You can see Africa's is highest, 5 years above the global average, and that is just a reflection of what we've been talking about in terms of the availability of aircraft and the hierarchy that has emerged in terms of those with the deepest pockets placing the biggest orders and clogging up the order books. But it's not just that. It's about we've had a crisis that emerged during the pandemic about spare parts and aircraft maintenance, and that has impacted carriers in many markets in terms of the maintenance cycles have increased. So that market for second-hand aircraft, for leased aircraft, they've gone crazy in the last 4 or 5 years. So I guess that is another compounding factor, isn't it, in terms of the availability of aircraft,
Yeah, it is. I think,
whether they're new, whether they're second-hand.
I think what we see here, though, understates the real African position, because there's a lot of, as Sean has alluded to, there's a lot of ACMI in the market, and it's growing. I also think, in terms of orders, the ACMI situation, quite a bit of that may well end up in the African market in some shape or form. So, what we're seeing there is actual orders from African airlines. What it doesn't show you is ACMI orders that perhaps are earmarked for Africa in some way or form. So I think it's, it slightly understates it.
Yeah.
And I think in addition to that, African airlines often do not have the luxury of waiting for a 6-year delivery cycle from placing an order to waiting for delivery. So African airlines, and for multiple reasons, again, they cannot often afford a brand new build aircraft, and it doesn't make sense for them because they can't squeeze the utility out of it that they need to. So African airlines tend to have smaller order books, other than obviously the behemoths like Ethiopian and most state-backed carriers who order these just as vanity projects. To them it is more important to have the national flag on the tail flying.
The nationalistic ego aircraft delivery of a wide-bodied for an airline.
Absolutely. It is less important to make money than it is to have the national flag on a half-empty plane flying to London, Paris, and Dubai. So to them, that is what wins elections, because 90% of your population is not flying anyway. To them, the imagery is more important than the reality. So the order books, in fact, you say the 326 order, I would wager that more than half of them are from state-owned airlines. Probably, we just saw that last week at Farnborough. Uganda Airlines ordered 4+4, but deliveries of that are not going to come till 2032, 33. Now, their CEO, who's driving this entire strategy, he's 83 years old. I mean, Atul Girma was supposed to be out by June on a temporary basis. There's going to be a successor. Will this remain their strategy? They've just placed an order for 8 airframes, but will the strategy still be in place 8 years from now? Because this airline is only 7 years old, and to expect that it can realistically make a second huge capital investment into a strategy that has changed more times than there have been sunrises since it first opened up, I'm not confident about that. And it's what it is. And I mean, look at the order books of somebody. And on the flip side, though, you look at someone like Ethiopian, which accounts probably for a significant chunk, at least a third of that future-looking order book. They're going to be poised to place another order pretty much anytime soon. I mean, especially with the 737 MAX 7 certification now. I mean, Ethiopian has been on the record that they've been reluctant to place an order for the 100-seater because of concerns with PWGTF on both E2 and the A220. With the 737 MAX 7 coming in, and given Ethiopian's commitment to a huge MAX fleet on the MAX 8, both for themselves as well as their satellite subsidiary airlines, I would not be surprised to see another big order coming out from Africa in terms of Ethiopian finally making a decision, whether that's for Boeing. I think probably 60% the MAX 7 has the inside track over there, but that order is going to come definitely before the end of the year, most probably in the third quarter this year, so any day now. And, we're going to see that, but I think, when we look at it, I think there are 3 different components of that. One is like the really good airlines, the behemoths, the Ethiopians and stuff like that, which are doing well and can genuinely have a long-term strategy for it. Number 2 is the vanity projects, which are just ordering planes that will show, I mean, Air Cote d'Ivoire, Air Senegal, Uganda Airlines, Rwanda, Air Tanzania, these are just highly priced paperweights, which sit at the airport more than they actually fly. And finally, you have the secondary market transactions, which are bulk of the hustling airlines, the airlines actually trying to make it work through commercial reasons in Africa do. And those are short term. It's kind of, I need a plane for September, in March, and what's available in the market, let's go and get it. You don't see it reflected on the order book, but the transactions are happening in the background, whether that's ACMI or a secondary market transaction. A lot of these are not even reported. You just see a plane suddenly show up and you're like, where did that come from? And then you go into dig into it. So.
I love the highly priced paperweight. There's a soundbite if ever there was.
Caithness glass.
I think the interesting thing is if we look at, because one of the things we wanted to look at from a data perspective was what's changed just year on year in relation to carrier domicile. So where are African carriers relative to other carriers? Because it's very common that we sort of think of growth being delivered typically by overseas carriers, particularly in some markets. You can obviously see the strength of Ethiopian Airlines in East Africa, behind that sort of dominant share. But interesting to see actually year on year that across all markets, the capacity share operated by African carriers has increased. I think I was slightly surprised when I saw that. I suspected that maybe it would have been level. So I think there's that, back to our sort of point about there is growth happening, there is optimism in the market, notwithstanding some of the challenges faced by African carriers. They are still managing to deliver growth into the market.
I think these figures may be slightly misleading in terms of it, because remember, when you are international includes cross-border intra-African traffic, and by definition, that will almost certainly only be provided by African carriers. It's very difficult for an Emirates to provide capacity between, Johannesburg and Windhoek, for example. So inevitably, you will see that. When you look in terms of the share of intercontinental, and I don't have current numbers for this, but I know that in the past when I've looked at this, the intercontinental market share of when you're looking between, say, Africa and another continent tends to be about 70% driven by non-African carriers in that respect.
Yeah.
So while these numbers are definitely heartening in that, and African carriers are indeed transporting more international passengers, that isn't always true for intercontinental demand. But on the flip side of that, I will also say that 70% of intercontinental passengers originate outside of Africa. So it's not really that imbalanced when, the 30% of Africans and 30% of African carrier market share intercontinentally, while 70% of international carriers and 70% of internationally originated demand, whether that is diasporan demand, tourist demand, business demand, or whatever else. So, it's an interesting set of numbers there, but I don't think Africa is losing out in that respect.
Yeah, it's a natural balance with the market structure, isn't it? So
exactly. It's not unusual relative to other parts of the world. In other parts of the world, you tend to see the same thing, where your origination of demand tends to match where the capacity is coming from. And that's logical, because people tend to be, especially like business travelers, they've got corporate contracts with their hometown carriers and so forth. They will fly with them. Tourists, they look at their local travel agent and their local advertisements, which talk about their airline when they're choosing the airline. So it makes sense, and Africa is not struggling as a result.
No. And you look at something like London Bangkok, I mean, that's nearly 80% UK originating traffic, and capacity is similarly sort of aligned. So it's, it is what it is, isn't it?
No, absolutely. And, it's as you said, it is what it is, but intra-African traffic is inevitably going to be dominated by African carriers. And if intra-African traffic was able to realize its true potential, we would see those numbers even higher, because those numbers should actually be in the 80% range. Because if you look at intra-European traffic and include that in international traffic within Europe, I'm sure you'd see the numbers in the 80 to 90% range for European carriers, even though a bulk of the long-haul traffic is probably being provided by international carriers, Middle East carriers, and so forth.
Yeah, no, absolutely. Okay, One or two more slides just to show then. So this one is where is growth originating from? So this is just capacity. Sorry, this is just a count of routes by region. So we can see obviously that, connectivity within Africa still still important, and there's that. This relates to my second slide. In North Africa, there's still considerable growth happening, largely into Morocco, from Europe, which has been happening for the last couple of years. But there's also
Egypt, Saudi Arabian market has been really growing strongly in the last 4 or 5 years, isn't it?
Yeah, which is what you're seeing in there. And then we've got the continued, much smaller scale, but continued North American growth into Africa. We've got a new Atlanta, Marrakesh service, and LA to Casablanca. And there's a 50-50 example. One's the US carrier, one's the national carrier. And then Egypt Air have launched a couple of new services into the US as well. So connectivity, that piece, and the other slide I was going to show, it is about intra African connectivity, actually. But we're seeing, it would be interesting to look at, maybe this is for the next African webinar, what the picture looks like for connectivity from Africa proportionately to all of those other global regions. Where are the gaps? How much traffic has historically been sucked up into Middle East hubs to then connect on to other parts of the world? And there's a trade-off, isn't there? So not every market is big enough to sustain direct international services, but we are seeing growth, steady growth happening, aren't we, in some of those markets?
Absolutely, and I think the key to African growth is going to be the development hubs, because Africa is, for the most part, a collection of very, very small economies, at least, if not very small geographically and population-wise. But economically, these are a bunch of very small pockets here and there. And as you say, the demand does not exist for them, other than maybe a few niches, to have nonstop connectivity to the world. So nonstop connectivity to the world is going to be provided through these big regional hubs. Addis Ababa does a superb job. I mean, everywhere you go, you could. 20 years ago, I actually had to fly between Ghana and Liberia via London and Brussels. So I flew Accra, London, Brussels, Monrovia. Today, there are 2 to 3 options on different carriers every single day. If I need to get between any 2 African cities, almost certainly I can do that through the Ethiopian Airlines network and their main hub in Addis Ababa, their satellite hubs in Lomé or Lilongwe or in Zambia or whatever else. These are all highly achievable things. So there's been significant improvement in that, to the point that, I mean, there's a standing joke that if you die in Africa and you're going to heaven, you're going to have to change planes in Addis Ababa. And that's how dominant Ethiopian has become on the continent. If you look in sub-Saharan Africa, Ethiopian and their hub is larger than the 2nd, 3rd, and 4th place hubs put together, which is Johannesburg, Nairobi, and I think I can't remember the 3rd one, which would be in sub-Saharan Africa. So, Ethiopian is at a whole different level, and their hub and spoke philosophy has been successful. So I think you will see more and more African airlines seek to emulate that, and that's probably a good thing. Sometimes copycat is a good thing, because if something works, it's where it is. And because of Africa's fragmented, 54 different states, I think the hub and spoke of strong regional hubs is probably going to be the successful model in the long run.
So Sean, I guess in summary, what you're saying is the best you, Deirdre, and I can hope for is that we pass through the yet to be constructed airport in Addis Ababa rather than the existing facility.
I think that the Bishoftu airport, if it is realized to even 80% of what they claim it is going to be, will be, it'll be a real game changer because, right now Ethiopians network, their growth is constrained because of physical constraints at Bole Airport and the terminal there. Their network is constrained because of the altitude of Bole. It's at 7,000 plus feet above sea level, while Bishoftu is going to be 2,000 feet lower. That will allow them to fly the A350 1000 nonstop to North America, which again opens up a humongous type of route network. It's just going to be a game changer in terms of what capability, and it's going to be custom designed for them. So, if you get that right, look at what Emirates has done in Dubai. It's the same philosophy that if we control the infrastructure as well as the implementation on top of that infrastructure, the world is your oyster. So I'm with Ethiopian. I have, they've got a great track record over the last 25 years since, Ato Girma, Ato Tewolde, and now Ato Mesfin, and whoever the next CEO will be appointed probably this month to succeed Ato Mesfin. They've all got an excellent track record of execution and keeping their focus right. So I'm very optimistic. I pass through Bole regularly. It's not as bad as some people make it out to be, but there are times when it's just bursting at the seams. Even in the lounges, they've opened a new humongous 3,000-seater lounge over there, and at peak hours, it's still full. So that really tells you how busy it can get over there and why they need
why they need the space. Yeah, that's the reality. So I think we've just got a couple of minutes left before we have to wrap it up. Other than Ethiopian, then, who seem to be a foregone conclusion. They're too big to fail. They're making great strides across the continent in terms of improving connectivity. They've got a profitable, sensible plan going forward. Who are the other ones to watch? Just briefly, which other airlines are we going to be talking about in 3 to 5 years' time?
I think Airlink in South Africa is a fascinating one. They've historically been a South African Airways franchise, but they had a very messy divorce during COVID where there was a legal case and they're still suing South African Airways and so forth, and have branched out independently. Subsequently, they've now, Qatar Airways has taken a 25% ownership stake in Airlink. Airlink themselves have placed an order for 10 Embraer E2s and are looking to expand outside of domestic and regional Southern Africa. They just took delivery of their 5th E2 yesterday. They've announced routes as far abreast now as Zanzibar, Mauritius. They've just filed for Cape Town to Nairobi, Johannesburg to Kilimanjaro. They're talking about Cape Town to Lagos. I think the E2 in particular gives Airlink the ability to really, to use the right size 100 to 120-seater aircraft to expand some of this connectivity from the South African market, which is large. And I think they're going to be one that's very interesting to watch. And they're not small by any means. I think this was their 74th aircraft, which has been delivered. It's an all-Embraer fleet ranging from 135s in the bottom end to E2 195s in the top end. It's a wonderful airline, and I know that they're going to be watching this webinar because they asked me to send them the link. So, hi to the Villiers and Catherine.
So you're giving them a shout out. Love it.
Shout out to them.
Nothing like sponsorship, is there, Sean?
Absolutely. Okay. But yeah, I think Airlink is one to definitely keep an eye on. And I think we've got a lot of others in Nigeria in particular who have potential. I'm not going to name names over there because there are too many to name, but I think somebody in Nigeria, which is going to be... Sorry?
And they've not sponsored you.
Some of them have, but I've got clients over there, but I'm not going to name them.
Yeah.
I think the Nigerian market, with the structures, with infrastructural improvement, with access to capital is available in Nigeria. One of the few markets in Africa where there is domestic capital available. I think we will see a dominant Nigerian player begin to develop over the next few years. I think the key is they've got to keep themselves out of legal trouble, which unfortunately some of them tend to get into. They've got to keep themselves strategically focused and consolidate their home market before trying to be the Emirates of West Africa. And they've got to be able to develop in-house strategic skills. So the manpower skills have to be developed, because if you are growing and reliant on expats, you will eventually fail, because expat labor is not something you can build a long-term goal on unless you have money and, deep pockets like the Middle East does.
I think those lessons would apply across the board, wouldn't they? Those are the kind of key things to keep your house in order.
But if people actually knew that, would there be a market for consultants like us?
Well, on that note,
since most people do know that, why do they continue to make the same mistakes every time?
Yeah. We could talk all day about that. Unfortunately, we are out of time. We're going to have to wrap it up. But thank you so much for joining us, Sean, for round 2. I think the audio was mostly pretty good. So yeah, brilliant. We'll wrap it up there. Thanks again for those of you who joined us last week for your patience. Hope you've made it to the end of this one. And we'll be back at some point in September with the next webinar. Thanks again. Thanks, John. Thanks, Sean.
Thank you. Thanks, Sean.
Thank you, everyone. Bye-bye.
Bye. Bye.
Bye.